Hello, this is Joe Pryor, the virtual real estate team in Oklahoma, and I'm excited to actually say something positive about interest rates. It's been quite a while. The Fed has really been raising rates, set for 75 basis point increases in a row. Recently the Fed has kind of reached out to the markets and said, look, we think things are going well. The consumer price index is looking better. And so we're not going to do another 75 basis point increase in December. There probably will be an increase in December, and one that is going to be very small. We understand it, maybe the first of the year, like February or something like that. But it's buoyed the market, mainly because even though that's the Fed funds rate, it's not directly attached to mortgage rates. Those are mortgage-backed securities, but it does affect them in terms of how people feel about inflation. And so once that was done, we're starting to see some easing of some interest rates. So for instance, on a 30-year fixed rate, we've been quoting 25% down lately, mainly because 20% is just not really working in most markets because, the rates are up about 4% on fixed 30-year rates. And so for that reason, we've gone 25. And so we're able to say last week, when I did a webinar for investors, 5.99% fixed rate. Now we're doing 5.875% fixed rate, and a pretty good chance we might see that shift just a little bit more, maybe 5.75. So I think we're heading in the right direction on interest rates. And again, remember, these are fixed rates. And once you buy a property and you lock it in, and you're in a market like Oklahoma City or Tulsa, which has a 22-year history of having increases in appreciation every year. May not be as a lot, compared to other markets, but some of those other markets went down tremendously at some point, and we're seeing some of them do that now. So that consistency is going to really pay off for you, mainly because if we can increase the cash flow just a bit, the thing that's going to make you really the most amount of money in the next 7 to 10 years is the fact that it's the miracle of compound interest. So compound interest means that if we're going up 5% per year, and for every $100,000, first year is now you're worth $105,000. The second year, the 5% is now on $105,000, and it just keeps going after that. And so we're seeing returns of anywhere from 13 to 19%, depending on whether you want to cash out or whether you want to do a 1031 and go forward. But 13 to 19% on your money annually for 7 to 10 years is pretty fantastic. So, in another video, I'm going to talk about adjustable rate mortgages because I've been doing this every month and go into a little bit more detail, but I'm also going to be sharing good news for that. But the overall good news for you, if you're looking to buy a home to live in or with me as an investor in Oklahoma City or in Tulsa, the rates are getting better, and that is very positive news.